Welcome to Kitco News. I'm Niels Christensen. Bullion investors just can't seem to catch a break, especially now with the U.S. Mint shutting down its West Point facility. Here to talk about the coin supply crunch is Peter Hug, Global Trading Director at Kitco Metals. Hello, Peter. Thanks for joining us today.
Hi, Niels. Good to be here.
So let's break it down. I mean, what does the supply situation for bullion market look like? I mean, what does this latest news with the U.S. Mint and West Point facility shutting down, how does that impact the market?
Well, it just exasperates the diminished supplies that are on the market currently. The West Point facility is surrounded by a number of outbreaks of the COVID-19 virus. So for safety purposes, the director of the Mint has closed the West Point production facility without giving an opening date, sort of to be determined. I think it more impacts the production of the Gold Eagle and Gold Buffalo. There is a shipment that is scheduled to be delivered this week to the dealers, and I think that'll be it for a while. So I would expect premiums at a minimum from a retail perspective to stay where they are. And again, depending on the dealer you go to, they range anywhere from about 125 to about 150 over spot for both the Buffalo and the Eagle. On Silver Eagles, there is some news that they may switch production facilities to another plant, but again, even with their capacity at current sort of half-mast, had West Point not closed, the amount of Silver Eagles that they're producing is not keeping up with the demand, and Silver Eagle premiums are still ranging, depending again on the dealer, somewhere between sort of the $7 range on the low side over spot to as high, I've seen as high as $12 over spot for Silver Eagles. And, the Canadian Mint has restarted production again, only at 50% capacity. But the backlog on demand for silver maple leafs is enormous. I mean, a lot of the dealers, thank God we were not one of them, pre-sold in anticipation of the Mint coming up in full production, and they all find themselves short to already committed sales. And as this production is coming out from the RCM, the first week's allocation was about a quarter of what most of the dealers had already sold. So it's going to take, in my opinion, at least 2 to 4 weeks just to catch up to current obligation. And in that context, I would continue to see premiums on silver maple leafs north of $5 to be probably going to stay with us for several weeks.
Just isn't a North American issue. I mean, Rand has reduced capacity. Europe reduced capacity. This seems like a global issue. I mean, what advice do you have for bullion investors at this moment? I mean, with premiums where they are, should they really be chasing the markets?
Well, I mean, I made that point last week, I think, when I spoke with Daniela. I mean, I would not chase the premiums, but again, it really depends on your comfort level. Many investors, especially sort of North American investors, and more specifically investors in the United States, are very, very nervous about holding their metals other than in physical format and generally in their own possession. So when you have that psychology, you really don't have a choice. If you're not already in the market and you want to buy physical bullion, you're going to have to pay what the premiums are currently. If you have a higher tolerance for risk and you have more comfort in the overall precious metals market, there are much less expensive ways to enter the precious metals arena. Obviously, ETFs. I mentioned again, I don't need to mention it again this week, but that we have a number of products. One is a digital gold product backed by a metal at the RCM. So there are ways to participate in this market at much closer to spot pricing than buying physical metal. That said, The global side, the Swiss refineries opened last week, and we're just looking at first allotments coming out of Europe into North America, and they're dismal. I mean, the amount of gold that a refinery such as PAMP is releasing into the U.S. market is incidental. I mean, incidental. Under 5,000 ounces of gold for the U.S. market is something that would basically be sold in less than an hour on a major dealer network. You mentioned the Rand refinery. Ironically, we have a joint relationship with a company. I don't want to give too many details now, where we contracted with them. This is prior to the COVID-19 issue, to sell a 1 ounce gold bar that has a black rhino design on it. And all of the proceeds, the entire proceeds, except a small administration fee of 1%, is going to be donated to the Wildlife Fund to save the rhinos. Now, the bars have been struck. They're sitting in Rand Refinery in South Africa. The problem is that Rand is on a shutdown until the end of the month, but even as of May 1st, currently there's no planes that fly from South Africa to New York. There's literally nothing that's flying. So now the other issue is, before we can release these to the market and obviously send the money to the Wildlife Fund, is we've got to find a plane to get this product over to North America. So the logistical issues are still in existence. And just to give you a little bit more flavor on that, we're in the process. It took me 2 weeks just to get a plane to move over a small amount of silver in terms of what we normally send to our Hong Kong office, but about 250,000 ounces of silver. Normally the freight on that is about 3 cents an ounce. The quote we got this morning was $1.40 an ounce. So it just gives you a sense of where everything is going from a logistics issue. The freight is gone up 1,000%, and finding a plane is almost impossible.
How long do you think these, even when things get back to normal, how long is it going to take, do you think, for the supply chain to heal itself, to get back to normal?
Well, first of all, I mean, at least the government of Canada, or the province of Quebec, has allowed gold mines in Quebec to reopen on Monday, considering them an essential industry. I mean, that's one of the other issues. A lot of the mines, certainly in South Africa and across Canada, and some in the United States, and the silver mines in Mexico, have shut down. So there's no raw material coming into the refineries that they can then refine from dory bar form into investment grade product. So there's a supply issue on the raw material side. When is it going to be normal? I mean, I was hoping for a bit better news this morning when I was listening to Governor Cuomo out of New York. And unfortunately, at the very end of his conversation, he said that they're going to continue the lockdown, not till May 1st now, but until May 15th. And the three surrounding states have agreed. I mean, the stock market was up 80 points before he said it. It's now down about 250. So, I don't know what normal means. Does it mean that the mines will be fully operational and functional? Will the mints be fully operational and functional? If those two events occur, then I think the supply issues on the physical metal side will diminish and the premiums will come down. The problem is there's absolutely no optics on what time window that's going to be. So you have a sort of a double issue here. If you're bullish the market, which I happen to be, I think gold is going to take out the 2011 high. Do you bite down now and pay $140 premium for the metal, or do you buy something like, again, a digital trading account or an ETF to be in the market and then wait for premiums to come down? It's a two-edged sword. One thing that we are seeing, and this is very specific to gold, not silver, because silver hasn't really performed to the same extent as gold. Silver basically pretty much where it was before the COVID-19 outbreak. Actually, it's still about $1 below that, whereas gold's trading up around the 1730 range. We are starting to see some people that are liquidating physical gold. And depending on the dealer, again, if you are a seller of physical gold, this is not a time to just go on a website and sell. This is a time, again, depending on amount, you probably won't get a great deal if you're selling 1 ounce. But if you've got any size, I mean, if you've got 500 gold maples or 500 1-ounce gold bars or 20 kilos, this is a time you want to get on a phone with a dealer and negotiate a bid, because dealers will pay up for physical material, so they have something in their inventory to meet the demand on the other side. So if you are a seller, this is a perfect time to be selling. If you're bullish, the market, chasing this market right now is difficult. You're either going to have to make a decision to take risk, ETF or a program such as Kitco offers, or you're going to have to pay up as much as 100% on some products in silver, and as much as about another 10% or on products in gold if you want to hold physical metal.
Mm-hmm. Thank you very much. That was fantastic advice for anybody who wants to sell precious metals. I think now's the time to negotiate.
Yeah, this is the first time sellers actually have some leverage to negotiate a better price when they want to sell. So again, I'm not suggesting you sell, but if you're in a situation where you're trying to raise cash, or you believe the market is at a level that you're happy with, and in the 1700s in gold, this would be a time to negotiate a bid with a dealer.
Well, again, thank you for joining us and talking about the supply crunch here.
You're welcome, Niels. Anytime.
Thank you very much for watching Kitco News. For all your latest precious metals news, go to kitco.com. Stay safe and stay healthy.